When you hear the word coal, what's the first thing that pops into your head? Probably a dying industry, right? Old, dirty, on its way out. But what if I told you there's a specific kind of coal that is absolutely essential for building our modern world? Well, today we're looking at Warrior Met Coal, a company that's not just surviving, but actually thriving by supplying a critical ingredient for steel. So let's get right to it. Is coal a dying business? I mean, it's the elephant in the room. And look, if we're talking about the coal used for electricity, thermal coal, yeah, the story there is one of decline. But for the type of coal that builds our cities, our cars, our infrastructure, well, that story is not just different, it's actually booming. So, to really get what Warrior is all about, we have to start with the fundamentals. And that brings us to Section 1, coal's critical role in steelmaking. Let's dig into why their specific product, what's called metallurgical or met coal, is something the modern world literally cannot function without. Okay, so this slide breaks down the two basic ways the world makes steel. On the left, you've got the old school blast furnace. This is where you take raw iron ore and mix it with met coal to create brand new, what they call virgin steel. On the right, you have the more modern electric arc furnace, or EAF, which basically just recycles existing scrap steel. Now here's the key takeaway, the only thing you really need to remember. Only the blast furnace method needs met coal. So you're probably thinking, okay, why not just switch everything over to the cleaner recycling method? It sounds simple, right? But the reality is, for huge, fast-growing economies like India and Southeast Asia, it's just not a real option right now. First, they don't have enough scrap steel to recycle. They're still building everything for the first time. Second, their electric grids just can't handle the insane amount of power these furnaces need. And third, they are still building brand new blast furnaces today that are designed to run for the next 40 years. The demand for new steel, and therefore met coal, is literally baked in for decades. And here's what that looks like in dollars and cents. Far from dying, the met coal market is actually expected to grow to a massive $89 billion by 2032. That's not a shrinking market, that's a growing one. And it's all being driven by those developing nations that are building roads, bridges, and cities. So the bottom line here is clear. The demand for the stuff is solid, and it's not going away. All right, so we've established the demand is real, and it's here to stay. Now let's zoom in on the company that's in a perfect position to meet it. Section 2, let's meet Warrior Met Coal. You know, Warrior's origin story is pretty wild. The company was literally born from the ashes of another company that went bankrupt. They managed to scoop up some of the best mines in Alabama for basically nothing. And because of that, from day one, their entire strategy, their whole reason for being, has been built around one single idea, being one of the absolute lowest cost producers of high-quality met coal on the entire planet. And that brings us to their biggest competitive advantage, their moat, as they say. And we're not talking about a small edge here. This is a deep, structural advantage that is almost impossible for anyone else to copy. Let's break down exactly how they pull this off. First things first, we gotta get this term down. FOB cost. It sounds complicated, but it's not. Just think of it as the all-in price for a mining company to get 1 ton of coal out of the ground, cleaned up, and sitting on a ship ready to be exported. That's it. In this business, whoever has the lowest FOB cost wins. Now, take a look at where that cost comes from. After the actual mining, the biggest slice of the pie by far is transportation. We're talking over a third of the total cost. This is the variable that can absolutely make or break a company. And you guessed it, this is where Warrior has its secret weapon. See, most coal producers in the US and Australia are totally captive. They're at the mercy of 1 or 2 giant railroad companies to get their product to port. It's a monopoly, and they pay through the nose for it. But Warrior, because of its unique location in Alabama, has access to this amazing river system. They can literally load their coal onto barges and just float it down to the port. And the impact of this is just massive. By using cheap river barges instead of expensive rail, Warrior slashes its transportation costs by roughly 40% compared to its peers. This is a durable geographic advantage that no competitor can ever replicate. It's built right into the map. And this table just puts it all in black and white for you. Once their new mine comes online, Warrior's all-in cost is expected to be just $95 per ton. A competitor might be at $120. That $25 per ton difference, that is pure profit margin. It's a massive cushion that lets them make money even when prices are low and everyone else is struggling. But look, being the lowest cost producer is only half the battle. That's huge, but it's not Warrior's only advantage. The second part of their moat is the quality of the coal they're selling.
Yeah, it turns out not all met coal is created equal. There's a definite hierarchy, a pecking order. Right at the very top, you've got the good stuff, hard coking coal, or HCC. It's the purest, most effective kind, and it's absolutely essential for making the highest grade steel. Then you've got the lower tiers below that.
So here's the crucial point. Warrior doesn't mess around with the mid or lower quality stuff. They produce only the top tier premium hard coking coal. Because it has fewer impurities, steelmakers need it for their best products. And because of that, it always commands the highest price in the market. And you don't have to take my word for it. This chart proves their pricing power. Realization is just a fancy word for the percentage of the market price a company actually gets to keep. Warrior consistently captures 83% of that benchmark price, while its competitors are stuck down at 67%. So think about that for a second. They have the lowest costs and they get the highest prices. That is a powerful combination. So low-cost structure, premium product. That alone is a fantastic business. But hold on, because there is a massive catalyst on the horizon that could completely rewrite this company's entire story. It's a project called the Blue Creek Mine. Blue Creek is an absolute game changer. It's a billion-dollar investment in a brand new world-class mine. When this thing starts up in 2026, it's expected to increase their total production by a staggering 75%, all while pushing their already industry-leading costs even lower. And folks, this is the punchline of the entire analysis. Right now, as I'm recording this, you can buy the entire Warrior Met Coal Company, all its existing mines, all its assets, for about $3.2 billion. Yet, the estimated value of the future cash flows from just this one new mine, its net present value, is a whopping $5.4 billion. Let that sink in for a second. The market appears to be saying that a single part of the company is worth way more than the whole thing. It's a huge disconnect. So, what does this all mean when you put it together? What is the bottom line on this company's valuation? Well, when analysts model out all the future cash flows from both the current business and the new Blue Creek mine, they arrive at a fair value estimate of around $116 per share. Now, compared to where the stock often trades, that suggests there could be significant upside, assuming, of course, that they get the project built on time and on budget. And that really just leaves us with a final question to chew on. In a world that is completely obsessed with AI, with tech, with the next big thing, it's really easy to overlook a company that just, digs rocks out of the ground. But it makes you wonder, in our frantic search for the future, are we maybe missing the incredible opportunities hidden in the essential, boring industries that are powering our world right here, right now?